Okay, thank you very much, all of you, for joining us to this webcast today, on which we will focus on Cyprus. Cyprus, in my mind, is not only a location which is close to us in distance, but also in terms of mentality. We work with our Cypriot colleagues a lot of years. A lot of our clients use Cyprus as a business gate for entering into business activities in Europe, but not only to Europe, also to other locations, as we will see examples today. Cyprus definitely makes sense from a tax perspective and also from legal perspective. We will learn today about the advantages of setting up Cypriot presence. We will get update from our colleagues on the tax developments, but we have also online the law leader of the Cypriot EY Cyprus, who will give us an overview on some legal advantages of using Cypriot entities in our structure. So this event is recorded, and if some of you have questions, you can use the chat in English or in Hebrew, and we will answer it during the webcast. I will give it over now to my friend Petros, who leads the international tax team in EY Cyprus, and he will introduce the rest of the team.
Thank you, Ram. A very good morning, everyone. It's a pleasure participating to this webinar organized by EY Israel, and would like to thank you for taking the time and putting these efforts in organizing this webcast. Before commencing my presentation, let's say, I would like to introduce my colleagues, my fellow partners. George Yassis is our VAT partner. He's leading our indirect tax services. And Haralambos Brunzos, Ram already made an introduction. He's our law leader for Cyprus, but not only, he's also leading the law practices of more than 30 countries in our region called CESA, Central East South Europe and Asia. So I think you are absolutely right. You are absolutely right, Ram, that Cyprus and Israel enjoy, I think, the best relations ever. It's not only about tax. We have seen a lot of bilateral trade between the two countries. So today's presentation will not only be about tax, and that's why Haralambos what Haralambos will talk about later on. So let's, I think, proceed with the presentation. The first part of which will be to give you a tax update on corporate tax matters. That will be the part that I will be presenting. Subsequent to that, my colleague George will give us a VAT update from an indirect tax perspective. And last but not least, Haralambos will talk about the bilateral relationships, the bilateral trade between the two countries, as well as what we see from in the market and what experiences we have with other Israeli clients. So without any further ado, I will proceed with the presentation. All right, sorry. So the first part will be to give you an update on the developments we had in 2020 and the expected developments we have in 2021. Of course, we will focus on the major developments. I will start with the approval of Cyprus national interest deduction rules on equity by the EU Code of Conduct. Effectively, the EU Code of Conduct performs an assessment of various regimes, both within the EU, but also outside the EU. and concludes whether such regimes are harmful and constitute a harmful tax practice. So the EU Code of Conduct has reviewed Cyprus NID rules. NID stands for National Interest Deduction, and has concluded that they do not constitute a harmful tax practice. And this is a very positive and welcome development, because it gives comfort to taxpayers using NID, that it does not constitute any harmful tax practice, and therefore there will be no changes to the regime. I will discuss later on how important is the NID rules and what we see in practice. Now, the second development has to do with the adoption of the remaining measures of the EU Anti-Tax Avoidance Directive. Cyprus had to adopt a number of changes in its domestic tax law following the agreement reached by the EU member states with respect to the BEPS actions. So the Anti-Tax Avoidance Directive included a number of anti-BEPS, let's say, measures, some of which were already adopted and implemented in 2019, whereas some other measures like the anti-hybrid rules and the exit taxation rules, which is quite relevant in many instances, were introduced in 2020. Moving to the expected developments, Cyprus, as well as all EU member states, have to adopt at least one of the defensive measures that the EU Code of Conduct is suggesting. There are 4 defensive measures, which are the introduction of withholding taxes and denial of expenses and payments made to jurisdictions which are listed by the EU as non-cooperative, stricter application of CFC rules, and stricter application of participation exception rules on dividends. Now, the EU Code of Conduct and the US in general have placed a number of jurisdictions under scrutiny and under the microscope. And they have asked a number of jurisdictions to introduce measures. So measures like to improve the tax transparency, the reporting obligations in these countries, and the overall reporting mechanism. So countries that fail to adopt the EU recommendations are placed on an EU blacklist, as you can see on the left-hand side. Currently, there are 12 countries or jurisdictions listed as non-cooperative for EU tax purposes. And this list is revised semi-annually. The last update was occurred like few days ago, and I think Barbados was removed and Dominica was added. So going back to what I said earlier, Cyprus decided to adopt one of the 4 defensive measures, and that is the adoption of withholding taxes on payments made to these non-cooperative jurisdictions. This is a fundamental change. It does not only affect Cyprus. All member states are expected to adopt defensive measures. For example, Luxembourg announced last week that they will adopt the denial of expense, whereas Denmark, for example, like a few weeks ago, announced that it will adopt 2 defensive measures, with introduction of withholding tax and denial of expense deduction.
So, Petros, I just want to verify that all the audience understands that because it's a dramatic change, if we have in our structure or in our supply chain a Cypriot entity that pays payments to territories which are listed on the left side of the slide, and the payments might be subject to withholding tax, Cypriot withholding tax, to a new regime of withholding tax. It was not existed so far. All of us have the understanding that Cyprus is an entity that does not withhold taxes at all. So I would like to address the attention of the audience that if we have one of the countries in the list on the left side in our structure we should pay attention that we need to get into restructuring or revisit the structure, or to think how to solve it before the withholding tax obligation gets into force.
Yes, that's absolutely correct. And we do know, I mean, that Seychelles, Panama, for example, Vanuatu, for the Forex industry especially, we know that these jurisdictions are being used by our clients, so they must, of course, take corrective action as soon as possible in order to avoid finding themselves in a situation where, you know, they are faced with withholding taxes in Cyprus. Thank you, Ram. And the last important change from a corporate tax perspective has to do with the upcoming adoption of transfer pricing rules. Again, there is also pressure from the EU, and the relevant bills have been prepared. They have been reviewed by the Attorney General Office, and they are expected to be enacted later this year. They will have a retroactive effect as of 1st of January 2021. Cyprus will not introduce, detailed transfer pricing rules, but there will be a change in the law, which effectively will say that the OECD transfer pricing guidelines shall apply. There are a number of thresholds, like for example, for a local file, the threshold would be 750,000 euros per type or category of transactions, whereas for the master file, the multinationals' annual consolidated revenues need to exceed 750 million, and the ultimate parent entity or the surrogate parent entity shall be in Cyprus. Let's move to the next slide. All right. As Ram said, Cyprus is not new to Israeli clients and investors. It has been used for at least over a decade now. Cyprus tax system is a residence-based system of taxation, which means that Cypriot companies are taxed on their worldwide income. However, the tax code includes a number of exceptions, which effectively make our tax regime a semi-territorial regime and a semi-territorial system of taxation. And what do I mean by that? For example, there are a number of exceptions, like the exemptions on dividends, on gains from sale of shares, of profits from the of a foreign permanent establishment, the loose, let's say, application of the CFC rules, which requires that the significant people functions or that contribute substantially to the generation of the income of the foreign subsidiary of the Cypriot company. So all of these rules, in essence, make the regime as a semi-territorial. And this what makes Cyprus, this is one of the reasons that makes Cyprus an attractive jurisdiction for setting up a holding company. Of course, Ram, you said this earlier, Cyprus does not impose outbound withholding taxes on dividends and interest, and that is fundamental. Now, setting aside, of course, the upcoming change in the introduction of withholding taxes on payments made to non-cooperative jurisdictions. So this explains why Cyprus has been, I would say, heavily used as a holding jurisdiction. Now, unfortunately, despite the excellent relationships at the political level and an economic level between the two countries, we know that Cyprus and Israel have not yet formulated or concluded a double taxation agreement, and this sometimes may be an impediment, maybe a barrier in Cyprus being used for direct investments into Israel, unfortunately. Nevertheless, there is a very large number of Israeli clients using Cyprus. Last but not least, I would very quickly want to touch upon the Cyprus financing company regime. In 2015, Cyprus introduced NID, which I mentioned earlier in my introduction, NID stands for National Interest Deduction on Corporate Equity, and this change actually puts Cyprus on the spotlight, and we have seen an increased demand and very high awareness, I would say, in the US and the market, and Cyprus has been used by a large number, I would say, US and European multinationals for setting up financing companies in Cyprus for group financing activities, but also in some instances we have seen clients, huge multinationals, relocating their treasury functions into Cyprus, and this is because of NID. Actually, NID is a deemed deduction on equity, is more or less treated as akin to debt. So NID can be used to reduce the tax base, the taxable income of a Cypriot company, which can reduce the effective tax rate to up to 2.5%. Another important feature of the Cypriot tax system is that foreign exchange differences are generally not taxable unless a company is engaged in trading in currencies or currency derivatives. So in the context of group financing activities, foreign exchange differences are neutral, and this is again fundamental because the ability to manage the upside and downside exposures that may arise on currency fluctuations is very important. So there is no need to do any planning to manage the tax liabilities that may arise in connection with currency differences. So please, if we can move to the next slide.
And just as a side comment, if you can just go back to the previous slide. So some of you can wonder what about the CFC implications in Israel, but by implementing an appropriate structure, we can use Cyprus as the financing group company with claiming that, for example, if the parent company is a business company for CFC purposes, on all the results on a group level are active. We can use Cyprus as a financing company. We can utilize the intercompany dividends between the operating companies and the Cypriot holding company for CFC purposes. So we have solutions from the Israeli side in order to incorporate Cyprus within such a type of holding structures. We have a question from the audience.
I saw that. I can answer it in the because we have a slide on IP activities. I think is in connection with the taxation of other activities, non-financing related, different kind of activities. So very quickly, I would like to mention a couple of the features of NID and why it is attractive, right? First of all, the NID deduction itself is quite high. It is based on two things: on a 5% risk premium, and on top of that, we add the 10-year government bond yield of the country in which the funds are invested. So you can imagine that in today's very low interest rate environment, NID deduction is quite high, very high. Sometimes it's even higher than the interest rate that would have been applicable on third-party debt financing. So the deduction is quite high, as I said, and the reference rates are revised on an annual basis, right? The 10-year government bond yield is based is determined by reference to 31st of December of the year preceding the tax year. So for 2021, the Ministry of Finance has calculated, for example, for a number of countries, for a large number of countries, the 10-year government bond yield, and has published this in its website. NID is subject to a taxable income limitation, which means that at least for group financing activities, the effective tax rate cannot go below 2.5%. what is very important is, despite of the fact that Cyprus has interest limitation rules stemming from the adoption of the relevant EU anti-tax avoidance directive, NID is not a borrowing cost. Is not, and then that is very, very important because it is not subject to the 30% interest limitation rule. Another important aspect is that NID is a deemed deduction. It is not a payment. So from at least in Cyprus and in many jurisdictions, it falls outside the scope of the anti-hybrid rule. So deduction will not be denied on the basis of the anti-hybrid rules in the jurisdiction of the payee or the debtor, for example, if you have a loan. And that is also very important. As I said earlier, the EU has approved effectively the Cyprus NID. So, and that's very important if you have the blessing of the EU. Last but not least, NID is not only about group financing activities. It applies to all taxpayers. So it can apply to any company which is which carries on a business and derives taxable income. So let's move to the final slide. Yeah. So Cyprus also has attractive rules within when it comes to taxation of intellectual property income, IP income. Cyprus in 2016 has adopted the OECD recommendations, Action 5 report of the OECD BEPS project. And our IP box regime is mostly or vastly based on the recommendations of the OECD. I guess in Israel you have something similar. There might be some small differences, but the concept is rather similar. So to the extent that the Cypriot company is itself engaged in qualifying R&D activities, and that is either having its own employees in Cyprus or abroad, or engaging subcontractors, third-party freelancers to do the R&D on behalf of the Cypriot company. All of this R&D expenditure does qualify for the purposes of the IP box regime and should be part of the qualifying expenditures of the nexus ratio. So as you can imagine, the higher the nexus ratio, the higher the proportion of the income that can qualify for the tax benefits of the regime. And the tax benefit of the regime is actually an 80% deemed deduction. Deemed deduction on the amount of profits that qualify under the nexus ratio. It is very important to mention that what constitutes overall IP income is not only license or royalty fees. A company which is engaged in trading activities but has qualifying IP is also eligible to claim the benefits of the regime, as long as it performs a TP study and determines the amount of the so-called embedded IP income. In other words, the intellectual property income that is embedded within the trading income, the revenues of the company. Couple of other points. The regime also only applies with respect to qualifying intangible assets. As you may know already, marketing intangibles like trademarks, logo, and brands do not qualify. Do not qualify for the purpose of the IP box regime because these assets do not require any R&D activity. And this is actually in line with the recommendations of the OECD. So we had a question from the audience as to whether NID and NID is available to other activities other than the financing activities. Of course, as I said earlier, it is available, NID is available to all taxpayers, even to companies which also or additionally claim the benefits of the IP box regime. We have seen in certain instances clients being willing and moving actually people here to Cyprus, and we have a number of successful and landmark cases where there is significant R&D activity taking place here in Cyprus. So this goes beyond the tax regime, of course, because Cyprus also offers other non-tax related advantage, which my colleague Haralambos will touch upon later on. So NID will also be available.
And we see, Petros, in the slide, the third-party developers. Some of our clients use developers in Ukraine, for example, as freelancers, what they call IT entrepreneurs. So can it work also with the Cypriot IP owner?
Yes. So yes, thank you, Ram. That's a good point. Yes, for the purposes of the regime, qualifying expenditure also includes payments made to third-party freelancers. So as long as they are considered third-party contractors, the relevant expense will qualify and will hit only the numerator, thus increasing the nexus ratio.
Thank you.
A last comment before I give the floor to my colleague George. What we have seen in certain instances, at least for already developed IP, and in few instances, the value of the IP was quite a number of billions of dollars. Cypriot companies are being set up, and IP is contributed to the capital of a Cypriot company, which, as I said, the IP is already developed, and evaluation is done in order to substantiate the value of the IP. And that company is effectively eligible to claim two deductions, NID on equity and tax amortization. In some instances, the effective tax rate can be 0 or even in the region of 0 to 2.5%. Thank you very much. Happy to take any questions later on. I will give the floor to George now.
It's the right time because with those IP contributions, there is also VAT aspect to that, and I'm sure that George will elaborate. So, George, the floor is yours.
Thank you, Petros. Thank you, Ram. Good morning, everyone, from my end as well. I'm George Liassis, and I'm heading the VAT and indirect taxes service line of EY in Cyprus. I cannot control the slides. Justin, there we go. Together, we're going to cover a short update on recent and upcoming changes in the VAT law, and we will cover a small reminder on important parameters of the VAT legislation that we have seen in practice that businesses may have opportunities to gain or may face challenges. We're going to cover holding structures, and that includes all aspects of that: pure holding financing, holding and financing portfolio companies, what we call active holding companies, management structures, etc. We're going to cover important aspects on specific industries and reminders on areas we have seen going wrong or having opportunities, such as the real estate, medical, education, forex, and fintech in general. We have seen Israeli businesses going through Cyprus for aircraft usage in the European Union. We'll cover that since we have, especially given Brexit, significant experiences in the area, and we have structured a significant number of client cases. And last, we will see, we'll go through the upcoming changes to the e-commerce package, the European e-commerce package that is coming into effect from 1st July 2021. I promised to the team that I would be fast. People say that they get easily bored on VAT aspects. I don't know why, but still I promise that I will be fast. First of all, we're going to cover holding structures. We have the notion in the VAT language of pure holding. A pure holding company is not a business person. Not being a business person means that you do not have any obligations nor any rights in Cyprus for VAT purpose. So a pure holding company has nothing to do with VAT. It is assimilated to a private individual. A pure holding company, however, is an entity which has no activity whatsoever other than receiving dividends from passively holding investments. And anything you do after that, in addition to that, may render the entity as a business person and may create VAT implications. Now, many of you in the participants we may have received even together rulings on entities which do have interest income, and we have confirmed that they are pure holding companies. That is indeed a specific case that we can take advantage of, depending on the specific facts. But the rule is that if you have any income, you are a business person, unless there is a peculiarity we can take advantage of. Now, after the pure holding, we have the holding and financing structures in our terminology. These are regarded as business persons. Entities which have holding and financing activities are business persons, and they have obligations in Cyprus. If they are receiving services above the VAT registration threshold, which is quite low, 15,600 euro, they have an obligation to register for VAT purposes in Cyprus in order to self-account Cypriot VAT through the reverse charge mechanism. And therefore, if you do not have the right for recovery, if your financing is European financing and you have a significant holding element, which means that you do not have the right for recovery of input VAT, we have an incentive there for material expenses to either shift the place of supply, if we can, outside Cyprus, or argue that certain of the expenses we are receiving at the Cypriot level are regarded as exempt from VAT, and we have a number of opportunities in that area for optimization through exemption. I
would like to take again to address the attention that based on our transfer pricing regulations, our headquarter costs of the Israeli headquarters should be charged to the subsidiaries, and one of the subsidiaries in typical structure is a Cypriot holding structure. So in the pure holding situation, just to emphasize, no matter how much costs we charge to the Cypriot holding structure based on a transfer pricing analysis, it will not trigger the reverse charge mechanism. It means that we should not be concerned that the charges of costs will trigger the 19% VAT in Cyprus. It's an important point. And if we don't have such a situation that it's a pure holding, George and his team can assist to make the structure more efficient in terms of VAT, because nowadays the VAT is a cost that not everyone are aware or pay attention to that cost in the structure.
Thank you, Ram. That's a very important remark, and the distinction. You mentioned transfer pricing, which is I wanted to touch upon, and thank you for the for making reference. If you have a charge from Israel to Cyprus, two references. If we have a parent-subsidiary relationship, as Ram correctly said, if the Cypriot entity is a pure holding company, you don't have reverse charge, which is a benefit. If the Cypriot entity is a business person, so it's a holding and financing or has any other activity, you do have reverse charge, and then you need to see whether you can cover or avoid the VAT. If we have a branch structure, so a head office in Israel, branch in Cyprus, the charges between the two are normally disregarded for VAT purposes, further to a European Court of Justice decision. On transfer pricing, the second remark I want to make, we have the following application. If we have on VAT, we apply the invoicing system and the actual charge system. So if, let's say, from an Israeli perspective, you charge 100 and you make a transfer pricing adjustment in the tax return of the Israeli entity, and you don't have an actual charge in the books, it's just a transfer pricing adjustment, then arguably at the Cypriot end we should not have a reverse charge unless you make it actual. Once we will have, of course, Petros is the expert in this and can elaborate on a different venue. If we have a corresponding transfer pricing adjustment in Cyprus, if it is just a transfer pricing adjustment, we can still avoid the reverse charge, but it is something that we need to examine in more detail. The other category I wanted to discuss about has to do with portfolio holding companies. We have seen cases where investors set up a Cypriot entity in order to have a private portfolio of assets being managed by an asset manager, either on a discretionary mandate or an advisory mandate. That company is again regarded as a business person from a VAT perspective and has the same obligations. And portfolio management services, unfortunately, cannot be VAT exempt. They are subject to VAT, both discretionary portfolio management and advisory. Now, from our experience, if we have a discretionary portfolio management relationship, and therefore the Cypriot entity has that portfolio being managed by a discretionary portfolio manager in the same way as a private individual has the portfolio without active involvement in the monitoring and decision making, etc., still we can argue that that business is a non-taxable person assimilated to a pure holding company, meaning that we will not have any obligations for reverse charge. But that's the exemption to the rule. The basic rule is that such an entity is a business person and must reverse charge on the services she receives. And we have an opportunity there, a significant opportunity. We have agreed in a number of occasions with the authorities in Cyprus to maximize recovery up to 100%, even in many cases, through the application of what we call easement rules. So what the easement rules do, we argue that since in a portfolio company the entity is dealing in securities, but we do not know who the counterparty is because everything is done through the portfolio manager, the broker, we argue that with respect to recovery of input VAT, we are going to be looking at the broker, the residency of the broker. And if the broker is based outside the European Union, we regard this entity as engaged in financial services with a non-European party, and therefore we have a full right for recovery. This is currently and was always an opportunity because we have seen cases using Swiss brokers and Swiss portfolio managers being non-Europeans. And now with Brexit, UK brokers and portfolio managers can bring the same result. Of course, all these must be confirmed in writing because it is not stipulated in the law, but it is an agreement we have as a VAT practice with the Cypriot VAT authorities. The last category has to do with what we call active holding company. Typically, they are called management holding companies. And the notion is that although as a starting point, being a holding company means that you cannot recover input VAT, if you provide services to your subsidiaries for consideration, then your holding element, your passive holding element is disregarded from a VAT perspective, meaning that we only see at the economic activities of that entity which provides services to its subsidiaries. Now, this opportunity started with management services, so that's why it's called management holding companies. But we have extrapolated it through the use of court cases of the European Court of Justice, and we have applied together with Ram's team the model in a number of occasions using royalty, basically any charges that are subject to VAT are considered as economic activities, even if outside the Cypriot VAT scope. Now, I may be a bit fast on the analysis, but as always, we are a phone call away with the details. Now, what I wanted to discuss with respect to the specific industries, real estate, hospitality, medical, and education, is a specific matter that I see businesses doing wrong or not fine-tuned. In such business, especially if we use Cyprus as a holding structure, holding an entity which holds the assets, or in the structuring in general, what we discussed in the holding structures slide still applies. We have seen a number of cases where we have disposal of securities, shares in entities that hold assets. And of course, the sale of shares is exempt from VAT, regardless of the fact that we may be selling an entity which owns only one asset. Yeah, still the sale of shares is exempt from VAT. And the negotiation, the intermediation for the sale of shares is also exempt from VAT. What is defined as negotiation, intermediation for the sale of shares is there I want to stand on. We have the exemption for negotiations, or negotiation services for sale of shares, but we must be very careful because of the notion of strict interpretation of VAT exemption. We need to ensure that if we are claiming the negotiations intermediation exemption for sale of shares, we need to ensure that the services that we are applying the exemption on are the services which are considered indeed by the European Court of Justice as exempt, and by, of course, the Cypriot authorities. And most importantly, that we have a sale of shares at the end of the structure, at the end of the transaction. We have seen many cases which we are applying, where businesses are applying the intermediation exemption, but we do not have a sale of shares, we have a sale of business. And I want to raise a flag that intermediation for sale of business are not exempt from VAT, and we need to be very careful for that. We need to ensure that the negotiation exemption is designated for sale of shares. Now, in the fintech payments and forex industry, that's a whole seminar on its own, and we're planning one actually, web-based. I want to focus on the thin line between what is taxable and what is exempt. And we have a number of cases where we have applied rulings to the authorities for payment services, for merchant accounting, for merchant acquiring services, to apply the exemption. Last, and I will briefly discuss the e-commerce package. We have the aircraft usage within the European Union. In order to use an aircraft within the European Union, you basically have two ways: temporary admission or full importation. Temporary admission can apply only by non-Europeans. You cannot have a European registered aircraft or a European-owned aircraft applying the temporary admission. We have seen cases of businesses doing that wrong. We must be very careful, and we must discuss in advance in order to structure the European use of aircrafts in order to ensure that we are not ending up with potential requirement for full importation of an aircraft which we cannot recover the input VAT on. And you can imagine the values of aircrafts and the liability that will bring. The slide for the aircraft is a bit heavy in order to give you some homework and in identifying potential issues. And I'm rushing into my last slide on e-commerce and the changes that we have to the VAT rules all over the European Union as from 1st of July 2021. We have elimination of what we call distance sales, and we have an opportunity for non-European businesses selling goods within the European Union. This is a new development. Non-European businesses can selling goods to the European Union, either if they have a fulfillment center within the European Union, or whether they are selling their goods to consumers, of course, from outside the European Union, can utilize what we call the import one-stop shop in order to simplify their compliance and accounting for VAT through registration in only one European country. I am at your disposal if you have businesses, clients selling goods to European consumers in order to advise separately on the use of Cyprus as an EU hub through the simplified one-stop shop. Now, that's all from my end, from an indirect tax VAT perspective. I'm yours for questions if you can text them in the chat. Thank you very much. As I always say, be careful. The devil lies in the details. We need to be careful for specifics. Back to Haralambos for his valuable input.
Thank you, George.
Hi, everyone. Thank you, George. Thanks very much. My presentation will be touching upon legal issues, but not only legal issues, also the commercial aspects of collaboration between Israel and Cyprus. So I'll give you a snapshot on what is the current situation now. As Petros said, it's the best time ever in Israel-Cyprus relations. This can be seen in at least 5 areas. First of all, it's investment and trade, where we've got numerous bilateral treaties, but also hands-on commercial expansion of Israeli businessmen and Israeli companies into Cyprus, and vice versa. Just to mention a few, obviously desalination and infrastructure works that have been carried out by a number of companies, FMCG trading, a number of companies again. A recent development is the award of the Larnaca Port and Marina redevelopment project to a consortium of Israeli interests, but also education and R&D collaboration. With the East Mediterranean emerging as an energy hub, sharing of natural resources is a critical area of collaboration. The most tangible matters relate to the agreement on the East Med gas pipeline. Whether that's going to materialize or not, of course, remains to be seen. The Euro-Asia interconnector, in which EY Law is actually advising as a legal advisor on the Cypriot side. The Aphrodite and Yeshai gas fields and the Aphrodite Leviathan Itku potential pipeline. The news at the moment is about a Leviathan Itku pipeline, but there is a potential of Aphrodite also being linked into that offshore pipeline network. George has touched upon the management and forex activities. So financial services is a key area again of penetration of Israeli interests into the Cypriot economy and foreign direct investment. On tourism, very recent development, the agreement between Israel and Cyprus in relation to no restrictions for vaccinated Israeli citizens. The EU is not very happy about that, but we are only 40 minutes away. So, I mean, the government seem to have taken things in their own hands. And finally, but not less important, is the relationship on security, which is, as we very well know, have been coming to Israel since at least 2006, a very critical issue. So when you have business in Cyprus, when you have Israeli nationals in Cyprus, obviously security is critical for them to be able to carry out their business and to have an enjoyable experience. Now, moving on to the next slides, I'm going to touch upon investing in or through Cyprus and some flags on that. So when somebody is investing in Cyprus, just to give a hands-on sort of approach, one should look at the regulatory and the EU law aspects, because especially if you are going into regulated industries, this definitely is an issue to consider. So in the areas of energy, of financial services, emerging areas like medical cannabis, which again our EY law practice has been advising since the early stages of this development in Cyprus. but also for public procurement participation, regulatory and EU law advice is critical in order for any Israeli business to be able to have success in its ventures in Cyprus. On the transactional focus, George again has already spoken on the VAT angle on real estate. We do see huge inflow of FDI from Israel into the distressed assets of the post-2013 crisis. Very well-known groups are expanding their investment. But one of the things to note is the GDPR issue. So if one is doing an acquisition, let's say, I would urge them to include, apart from the other aspects that are common for a due diligence exercise, like corporate, like real estate due diligence, pending claims and disputes, employment and mobility issues, I would urge to add the GDPR aspect. There was a very recent case in England, actually, the Marriott case, where one of the largest fines have been imposed on Marriott when it acquired a chain of hotels. They tried to claim that the breach of data was pre-acquisition, but there has been now a ruling that the successor entitled, so the entity making the acquisition, continues to be liable for the fines for breaches that occurred in the past. So I would once again urge everyone to take that into consideration. Another recent development is the funds legislation, alternative investment fund legislation. Cyprus has fully aligned itself with the EU legislation on alternative investment funds. And I think this is critical because we see alternative investments getting a much bigger slice of traditional investments. We have three types of AIFs. We have the AIF with a limited number of persons, the AIF with unlimited number of persons, so the retail AIF, as we call it. And we also have the RAIF, which is very popular among Israeli investors. Why? Because it's externally managed, so it's managed by an external regulated alternative investment fund manager. The two first types, so the AIF LMP and the AIF UNP, are regulated structures. They are regulated by SISEC, whereas the RAIF is not a regulated structure, it's a registered fund with SISEC, and the regulation happens at the level of the alternative investment fund manager. An AIF usually takes between 6 to 9 months to be set up, whereas a RAIF can be up and running in as little as 8 weeks. In terms of the process to set up, it's not materially different in the three cases. But where we see the benefit of Cyprus compared to Luxembourg or Ireland, which are very attractive jurisdictions in the EU, very popular, I would say, is cost effectiveness, not because of a lower quality of service, but simply because of the more competitive cost structure compared to Luxembourg and Ireland. So especially for venture capital or for any investments below 1 billion, I would say that Cyprus has a very strong cost-benefit advantage compared to Luxembourg and Ireland. This is a typical structure of an umbrella fund, as we call it. The reason I included this slide is because the compartments that you can see in this slide are ring-fenced from a legal and financial point of view, so you cannot have leakages from one compartment to the other. This is according to the AIF legislation, where you can have different investors investing in different buckets or in different compartments, as we say. So an investor can choose to invest at the top level of the umbrella fund or in any of the compartments underneath. And you can have different asset classes, for instance. So for diverse groups investing, let's say, renewables, investing in securities, or investing in other types of investments, compartments are extremely attractive. Now, another thing that we see is gaining a lot of traction is the operation of Israeli fund managers in Cyprus. The reason for that is obviously proximity. So only 40 minutes away, you can have an EU management base. There are VAT advantages, as George mentioned, but also a personal taxation benefit on the non-dom residence status or non-domicile residence status that Petros can comment upon. So there are different ways to achieve that, either through a third country entity authorized to provide portfolio management services by CySEC, or through an actual setup of a Cypriot subsidiary exercising the management function in Cyprus. There's also the delegation potential, so the Cypriot manager can delegate part of the management function to a third-party manager, like the Israeli fund manager, for instance, subject to, of course, certain conditions. VAT needs to be taken into consideration in such circumstances. I would like to note that there is an MOU between Cyprus Securities and Exchanges Commission and the equivalent Israel Securities Authority for collaboration and recognition of certain credentials by individuals and companies, which makes it easier and faster to mobilize in Cyprus. Now, on the headquartering front, which we see the use of Cyprus as a Fort Worth base, essentially, for Israeli business. Two things to note. One is the fast-track business activation mechanism that has been introduced by the Council of Ministers very, very recently. What's critical about that is the ability to essentially acquire work permit for more than 200 employees in Cyprus, despite them not being EU nationals, in specific categories. And I'm mentioning that because for Israel is extremely important. For instance, developers, IT developers are included in the list of specific professions that comply with this fast-track business activation mechanism. And for this reason, we see ICT companies moving from other jurisdictions into Cyprus for headquartering purposes. Obviously, there is a combination with the IP box RAM that Petros has very just recently mentioned, combining local development with the potential to headquarter in Cyprus. And of course, wargaming, for instance, was one of the success stories, Amdocs, but now we see more and more companies in the fintech space coming to Cyprus. It was critical to create a mobility framework, and now this is in place. So more than 200 employees, if they fall within the designated categories, can acquire work permit and resident status in Cyprus. The second trend that we see is a family office trend. So obviously wealthy and ultra high net worth individuals, they have their corporate affairs that they take care of through Cyprus. Now we see more and more Israeli high net worth individuals setting up their private affairs in Cyprus with the establishment of family offices. The reason why this is done is not only tax, it includes also things like asset protection, and I'm going to touch upon it later on, and succession planning, but also the ability to essentially create substance in Cyprus and hence be able to enjoy some of the tax benefits that Petros mentioned before, both in their corporate and private affairs. This is more and more coupled with FDI in Cyprus. So we see that family offices now of Israeli interests are investing in the actual Cypriot economy. I mentioned asset protection. Trusts is the most, Cyprus International Trust is the most popular tool for the purposes of asset protection. This is usually done, as I said, for succession planning, also for marital issues, matrimonial issues, pensions to employees, and also as an investment mechanism. Important thing to note is that a trust is transparent for tax purposes, and it's considered to be a transfer of assets during life, so it falls outside the forced heirship rules. One final point is the Abraham Accords is a new development for Israel as well. And we see that questions are being raised in a positive aspect with for the use of Cyprus as a holdco or as a JV co for investment into the UAE from Israeli or joint investments by UAE and Israeli interests into the UAE and vice versa. So I just thought it would make sense to flag that out. Concluding, we will have soon developments on a UBO registry, and we will have a dedicated webcast on this development within the next 2 weeks, as it will most probably come into force on 16th of March, and we are expecting the relevant regulations from the Registrar of Companies. That's all from me. Thank you very much.
Thank you very much. It was really interesting, and thank you for all participants in this call. We a little bit ran late. You will get the presentation by your email, through your email. And as I mentioned before, the webcast was recorded, so you will also get link to the record. Thank you again, everyone. Have a good day.